I don't care what kind of crash or recession that we're facing, we are never coming offline. TikTok is just too damn funny. Welcome back to Brookman Finance. My name is Adam. It is no secret that inflation is ramping up. It's everywhere. We are seeing the higher prices in our day-to-day lives, and it makes investors very nervous for the stock market. But why? Because rising inflation has a dangerous effect. Input prices become higher, meaning what it costs to produce something becomes higher, such as the ingredients for ice cream. That in turn raises the output price, which is the cost of that final ice cream product. Now, the company doesn't want to eat that profit margin, no pun intended, so what do? They raise the price. Therefore, consumers are now purchasing fewer goods with the same amount of money because higher prices, same wages, we just can't buy as much as we did, which equals less purchasing power. Revenues and profits decline for companies, and the economy slows for a time until the economic equilibrium is finally reached. However, this causes a lot of panic and volatility in the market. If you understand there is a balance when it comes to investing, it can make your portfolio extremely resilient in times of turmoil. When the market crashes, there are some stocks that do very well. And in a bull market, it's very easy to look like a genius. In this video, we're going to look at 6 stocks that can immediately add some resiliency and balance to that portfolio for whenever the market crashes, because at some point it's going to. Now, these may not be the sexiest stocks. These may not be the fun meme stocks that we like to follow on Reddit, but these are great staple companies that you will appreciate whenever you're seeing weeks and weeks of red, but these companies and stocks are still holding strong. The first one on my list is Duke Energy. Now, during a recession or a crash, people's spending habits change. They may change their vacation destination. They may not eat out as frequently, but the one thing that's not going to change is they're going to want that power and they're going to want their utilities. People want their water hot and they want their refrigerators cold. Duke is currently trading for $104.50. They've seen approximately a 5% increase every year for the past 5 years, as well as offer a 3.76% dividend yield, which is the highest dividend yield on this list. This is a solid company to have in your portfolio during any type of recession. Number 2 on my list is Walmart. There is no better example of resiliency than Walmart during that nasty 2008 year. People want to minimize and save during those rough financial years, obviously. But in 2008, Walmart actually grew the revenue by 7.2%. And this was one of the worst recessions in generations, but Walmart continued to crush it. In fact, they grew their dividend by 8% and their earnings per share went up as well. Now, Walmart is currently trading for $141 and over the past 5 years has managed almost 20% of growth every single year. Regardless of crashes or recessions, Walmart is just a solid company all around to have in your portfolio. It may not be Tesla, but they are a solid company that gives solid returns year after year. When your toilet breaks, you're going to go buy another one. At least, I hope you do. So this is kind of a toss-up between Home Depot and Lowe's. Now, between the two, both great companies. I like both of them. They're very similar in a lot of ways, but I've got to give the nod to Lowe's on this list. Going back to 2008, Lowe's had a slight drop in sales and Home Depot had around a 7% drop. Now, over the past decade, I would say that Lowe's has actually gained in popularity. They've gained in popularity a little bit on Home Depot. But in fact, in 2008, they still had a higher annual revenue than they did in 2009 and in 2010. And currently, I think Lowe's is the better value stock at the current price of $195 as opposed to Home Depot at $321. And I'm not saying that because of the price alone. There's obviously other factors when it comes to flow and that kind of thing. But over the past 5 years, Lowe's share price has increased approximately 27.8% every year compared to Home Depot at 27.4%. This may come down to just who you like better as a consumer, because they're both very, very similar, and you may just, that $321 share price for Home Depot may be a little much for you, and maybe the $195 is just a little bit more affordable. Next on the list is AMT, or American Towers Corporation. AMT is the largest global owner and operator of wireless and broadcast communications towers. Its portfolio includes approximately 170,000 sites in the United States, Latin America, India, Europe, and Africa. The core business for the company is leasing space on its wireless towers primarily to wireless carriers, government agencies, and broadband data providers. This is an infrastructure play for me. This is not a Verizon play. This is not an AT&T play. Think about it like this, because this is the way I'm kind of thinking about it, and maybe it'll make sense for you. I look at this as like I'm betting on an entire sports league as opposed to betting on a single game or a sports team. We now, as a society, depend on wireless communications for everything. I don't care what kind of crash or recession that we're facing. We are never coming offline. TikTok is just too damn funny. The Roni barely made AMT even blink, and they just kept cruising along whenever the Roni crushed a lot of other companies. Now, AMT is currently trading for $282 with a dividend yield of around 1.8%. Over the past 5 years, they have increased almost 30% every single year. This is another stock play that you're going to appreciate regardless of if there's a crash or not going on in the market, because they are going to consistently give great returns year after year. You should definitely be looking in AMT's direction for just a solid company with incredible returns. And when a stock crash does happen, you're going to really appreciate AMT in those moments. Next, everyone remembers the toilet paper fiasco of 2020. Lots of butt cracks were nervous about running out of toilet paper, and people were stocking up and you couldn't find any. Well, one business that we can count on doing good business during a downturn is the grocery business. Now, Kroger operates over 2,500 grocery and multi-department stores under 17 different names, and well, it's just the biggest one around. Whether you know it or not, chances are you have some kind of Kroger-owned store near you, and for me, it's Harris Teeter. And lots of people think that in a stock crash, Kroger is the best option, but I disagree. That's not where I would park my money in a grocery store play. I would actually look at a grocery store chain that's a lot smaller, but they're growing rapidly and they have far better yearly returns on that share price than Kroger. I like the grocery store chain Ingles for this play. Ticker symbol IMKTA, and you may have never even heard of Ingles. I think they're primarily in the South right now, but they're growing at a very quick rate. Ingles has given almost a 50% return over the last 5 years, with Kroger only giving 7%. Now, I believe that they're going to see similar results when a crash happens in terms of sales and revenue. But right now, Ingles is trading for around $59. Both Kroger and Ingles could be solid plays during an economic downturn, but I believe that Ingles will produce far better results over the next 5 years, and that's including when a crash occurs. Now, for my last one, and just hear me out because it may just come as a surprise, but that is Facebook. Currently, there are almost 3 billion people that use Facebook, with 1.8 billion people using it daily. To put that into context, that is 3 times the amount of people that own an iPhone. And in 2020, the ad revenue, even during the tumultuous time that we had, they still produced $84 billion in ad revenue. Facebook adds more users every single day, and they are creating more revenue generating opportunities. Now, in times of financial burden, people may cut that Netflix subscription. They may not buy the latest and greatest iPhone. But you can guarantee that they are going to be using Facebook, and that revenue is going to continue to drive up. And right now, Facebook is trading for $340.75. But over the past 5 years, you can see that they are up 190%. That is 38% per year. Facebook, I believe, will be a great company regardless if a stock crash is happening or not. But even in times of a crash or recession, I think you will be able to count on Facebook to outperform the overall market. Now, there are a number of stocks that we could continue talking about. There are many more that are very good companies to have in your portfolio during a crash. But let me know what you think should be in there in the comment section below. I'd love to hear your thoughts. As always, I hope those stocks stay green. I hope you stay safe, and we will see you next time.